Yeah, I think that's spot on. I've not read that DB research yet, but I think monetary policy from a US and European/UK perspective was already starting to diverge, with growth prospects really not that good in the UK and Europe, but still relatively good in America. And so, if Chinese goods find their way to the continent and into the UK and exert a downward pressure on prices, then I think it gives both the ECB and the B of E more scope to lower interest rates more aggressively than markets are anticipating this year, especially as growth is likely to continue to weaken over the coming quarters.
So how do you tally that with growth expected to weaken, but perhaps more supportive policy? How do you tally that from a market perspective? Do you want to put more money to work in the UK?
Yeah, I think the UK and European markets, I mean, a lot of stock markets really are pretty cheap at the moment. It really is just the American market at the top end, which is expensive. And so I think if we've got a tailwind of sort of interest rates falling in the UK and Europe, and actually sort of growth maybe not as strong, but sort of not atrocious, then I think that's a pretty good tailwind coupled with very low valuations for UK and European stocks. And I think to a certain extent, you're potentially seeing that narrative already play out in January. I mean, who would have thought, sort of a couple of months on from Trump's election, that European stocks would be the best performing markets this year and outstripping the US, and it's similar with the UK large cap. So I think that narrative has further to run, and we're very much bullish on UK and European assets as we sort of head through the rest of 2025.
You know, it's quite a low bar when you talk about growth not being atrocious in these regions. It's hardly the most compelling buy case. I mean, where is the growth going to come from, the little growth that you see in the UK?
It's a very tricky question. I mean, I think from a UK perspective, since the budget, business confidence is shot to pieces. I think the consumer is in an increasingly tricky position, with sort of the cost of living and the cumulative impact of interest rate increases starting to hurt them. So it is difficult to see which parts of the economy are going to sort of lead us out of this tricky bit. I think the government is making the right noises around growth, and especially over the last couple of weeks. But we need to wait and see the details on that, and whether that is going to spur growth. But really, I think the growth is going to come from a lowering of interest rates. You know, real interest rates are very high in the UK at the moment, and I think the nominal rates have got to come down to really start to kickstart the economy and get businesses and consumers spending and investing.